When was the first time that you ever went to a Starbucks? I can remember going to a Starbucks in Houston. It was, I believe it was in a mall called Willowbrook Mall. And at first, I really thought that the coffee was kind of strong, but it was interesting. It was dark. It was aromatic. It grew on me. And over the years, I've gone back to Starbucks in a lot of different locations. It's become a place that I go to wait, a place that I go to relax. It's just some place it's woven into the fabric of my life. I can remember waiting on my son's baseball practice. I would drop him off because you can only watch so many fly balls and ground balls before you just kind of get bored, go crazy. So I would go to Starbucks and I would wait every day for him, and I would do some work and I would have some coffee, I'd have a bagel, and I would wait. But the whole idea of me telling you about this is not just to tell you about some stories from my life about the way that I went to Starbucks. Is to help you identify that Starbucks is one of those companies that it weaves its way into the fabric of your life. There's a lot of people like that. There's millions of people that go to Starbucks for a lot of different reasons. They've built it in as a trendy thing to do. It's a guilty pleasure that they utilize. And I think that what you want to see today is that the company has tapped into that, and they continue to grow and grow based on the fact that people will give up some things to use their product. And ask yourself, is that really the kind of company that you want to invest in? I think that it probably is. So let's go ahead and begin and talk a little bit more about the analysis. We're going to talk more about the specific numbers of Starbucks and talk about how that they have possibilities, how they have problems going into the coming year, and help you to decide if Starbucks is really the kind of company that you want to add into your portfolio. So let's go ahead and begin with today's Retirement Learning Lab. Welcome back. Welcome to the Retirement Learning Lab. My name is Van Richards. I'm a financial advisor, and I help people to grow their knowledge so that they can be in control of their financial future. And today we're talking about Starbucks, investing in Starbucks. And I want to help you to identify, is this a company that you want to utilize or you don't want to utilize? Now, the idea of Starbucks is the story of it. We'll talk about it as we go along today, but we can't ignore the fact that Starbucks has had not really that great of a year. The pandemic hit the company hard. Its competitors have come faster forward back from the pandemic. But that leaves us in a position where we have to ask ourselves, are we at a point where the glass is half empty, or are we at a point where the glass is half full? Now, what I put up on the screen, I have a spaghetti graph that I put up here for you that's going to show you four companies. It's going to show you Starbucks and three of its competitors. I want to make it just a little bit bigger for you so you can see what's going on here, because if you're just listening, I have a spaghetti graph, and a spaghetti graph is, that's one of those graphs that has all the lines that go across the page from left to right. And you look at the mountains and the valleys of the growth of the stock in itself, and you try to determine how it's done. The one that I put on the screen for you is over the past year. Now, the blue line is going to be Starbucks. SBUX is the ticker symbol. And you'll see actually that Starbucks has not had a good past 12 months. The company's actually in negative territory. When you compare to other companies like McDonald's, McDonald's is in the red. McDonald's is actually in the green from that standpoint. And we also are looking at Yum, YUM, and also QSR. Now, just to give you a little bit of understanding of what those companies are, it's McDonald's, Yum is KFC, Pizza Hut, Taco Bell, and QSR is Restaurant Brands International. That's Burger King, Popeyes, and Tim Horton. Most of those companies, except for the Burger King, Popeyes, Tim Horton, which is the QSR, have done better than Starbucks over the past year. Actually, all of them have. QSR is up only about 0.24%. I'm not sure what it is right now. This was taken from Friday's close, but you can see that Yum Products is up 16 to 17%. McDonald's is up 21.38%. And it's kind of a size. We look at Starbucks and go, it's down over the past 12 months, 9.79%. But you have to ask yourself that question again. Is the glass half empty or is the glass half full? Now, what do I mean by that? What I mean by that is, are we at a point where we're low in the price and there's a good possibility that we're going to see an upside to it? Or is it not going to come back from the pandemic? I think that as we talk about some of the fundamentals of Starbucks today, you're going to see enough information that'll help you make a determination for yourself on how this company has the prospects for the coming year and what may be happening with it. So let's look a little bit further at it. Now, before I go into it too much, I do want to tell you most of the information that I'm helping you with today is I'm trying to help you to identify if this is a stock that you want to buy. The second most question that I get is, I own a stock, but should I sell it? So what I've done is I've created a free educational resource for you. It's called whentoselladividendstock.com. And it's a short 10-minute lesson where I go through some of the principles that will help you to identify a stock that's ready to be sold. And if you own it, should you sell it? So if you go over, you can see the video, you can see the lesson, you can get a lot from it. It'll help you to keep track of the investments that you have so that you will have enough knowledge that'll empower you to make good financial decisions for your future. So a lot of times when I begin in talking with a company, I jump right into telling you about what the company does. But Starbucks is kind of interesting because, well, not too many people don't know what they do. Starbucks is a high-end coffee, a quality coffee, premium quality coffee company. That's what they do. They're a worldwide company. If you look at Starbucks right now, 61%, well, I love Kelly Kuko from the Big Bang Theory. Anyhow, you see that she's there on the screen because she's a spokesperson for Starbucks. And you can see that 61% of the global portfolio for Starbucks is actually in two countries. It's in the United States and it's in China. In China, they have about 5,557 stores. In the United States, they have a whopping 15,500 stores. They also have their retail operations that you can go to, like Target or Walmart or wherever. You can go to Walgreens and pick up Starbucks coffee, either in the prepackaged or the coffee in itself. Now, the pillars of growth of this company is what I think shows what the possibilities are going forward. And I want to run through those. There's 6 of them. The first one is the pillar that is the most identifiable, I think, is that the company has streamlined operations that are able to be duplicated from one store to the next. They have menu innovations. Remember going back to Starbucks when they first just had coffee and maybe bagels, but now they've got cake pops, they've got salads. There's a lot of different things in there and a lot of different drinks that are coming into making the stores more popular in the afternoons. We'll talk about that in a little bit. Digital engagement is a big factor with Starbucks. About 70% of their orders are done on their digital platform. That's surprising to me because I really don't use that platform in itself, but it's a big deal and it helps the company really get a lot more traffic inside the stores. They've also been very selective in closing stores. I live in Northwest Houston. I was really surprised that one of the Starbucks stores closed. I thought that it was fairly popular, but perhaps it didn't meet their criteria. That location has actually been taken over by a new company, and right down the street since Starbucks left, we have a new location for Black Rifle Coffee. So there are competitors out there that are popping up where Starbucks is leaving a particular area. But they are also opening up more stores. That's one of the pillars of growth in itself. And China has a great opportunity for the company to grow significantly in the coming years. So they're moving more into underserved US areas and underserved areas in China. And they have a loyalty program called Stars for Everyone. I think it's a great program. It's really helped people, it's the way that Starbucks is trying to be more inclusive of everyone from every economic background, because their coffee is not cheap. There's no secret about that. You can go to McDonald's or you can go to Dunkin' Donuts and you get a lot cheaper coffee. But they understand that inflation is hitting everyone and people have to make a little bit of a sacrifice if they want to go to Starbucks. So what Starbucks has done is they built a loyalty program that's helping customers so that they can build up value to purchase their products more as the time goes by in the future. Now, as we get into well, I'll talk to you a little bit about the company in itself, and I've gone a little bit long on that point because I want you to understand that even though this company's down close to 10% over the past 12 months, there is a track that they can run on that will make them profitable for the long term. But I can't make that decision for you. I want to give you a little bit more information now about the fundamentals of the company. I use a concept of fundamental analysis that I've developed over the years called SEC. SEC stands for stability, earnings, and competitiveness. So I'm going to take a few moments now. I'm going to run through the different fundamentals of this company so that you can see what the possibilities are from the numbers on the page. Because you might be the kind of person that thinks, I want to buy this company because they have a great story behind their growth, which is why I told you what I told you in the very beginning. Or you might be the kind of person that says, show me the numbers. I want to see the numbers. I want to see what the profitability possibilities are for this company going forward. So this part's for you. So let's get into it just a little bit. When I look at a company's possibilities going forward, I look at something that Warren Buffett has popularized, which is called a company's moat. Now, a moat is that invisible barrier that's between the company and their competitors. Even though the three companies that we've looked at previously at the very beginning today are more advanced in value than Starbucks, doesn't mean that Starbucks has a competitive edge, because they do have a competitive edge. That's why Starbucks is one of the few restaurant companies out there that has a wide moat. Remember, that moat is that invisible barrier. That's the competitiveness, the competitive edge that that company has. When you look at the characteristics that build that moat, there's really three of them, in my opinion. The first one is an intangible asset. That's the brand in itself. Starbucks is a brand that's recognizable on a worldwide basis, and they're taking advantage of that. They're digging in, they're taking advantage, and they're helping that company to spread on a worldwide basis, mainly in China, as we look at the 5,500 stores compared to the US stores around 15,000 in itself. The size of the company, the advantage it gives them, we'll talk about that just a little bit more detail in a moment. And there is scale advantage too. We'll talk about that too. Let's look at it a little bit more carefully. When we talk about the intangible assets, the brand, the Starbucks brand in itself, the reason that it is so valuable is that they are able to build another Starbucks in a new location, and they're able to duplicate from store to store relatively similar growth. If you look at the 5-year annual price increases for Starbucks, they've been able to dig into that brand and not only have stores that are profitable in a relatively short period of time, but they've been able to continue to increase their prices. Now, just in the past year, yes, I know that inflation is growing at about that 7% number, but that we've heard in the news. But Starbucks over the past 5 years has continued to increase its prices, and people have continued to buy their products. They've increased their prices on an average of 6.8% over the past 5 years. And as they continue to increase their prices, people are coming back. They're saying, this is a guilty pleasure that I want to continue to have available to me. So they're able to replicate their store growth not only in the United States, they're taking that overseas to China and to other areas throughout the world, primarily in China. And they're leveraging that brand, the brand of Starbucks, into their retail sales. So you can go to a Kroger, you can go to a Target, you can go to Walmart, and you can buy Starbucks products. Now, when we look at scale advantage of Starbucks, one of the biggest things that they're able to do, I'd say the most significant, because big is really what we're talking about here, they're able to leverage the technology that they use and do it on a store-to-store basis. They're able to automate their inventory management, their scheduling, and their very successful ordering platform that I mentioned to you a little bit ago, their loyalty program. Now, the size advantage really goes glove in hand when we're talking about scale and size. It gives them an advantage of lower administrative costs. It also helps them to lower the cost of commodities. They have to buy paper goods and they have to buy coffee, so they can buy it in such quantity that they're able to get it at a lower price. They also have lower marketing costs than their peers. When was the last time that you saw a Starbucks commercial or you heard a Starbucks commercial? Because you do hear them from time to time, but now they're using their loyalty program in their advertising. And there's actually the very beginning when I showed Kelly Kuko from the Big Bang Theory, she's doing a advertisement for their retail brand. So they're using advertising, but they're doing it less than their competitors. How many McDonald's commercials do you see in comparison to how many Starbucks commercials that you see? Probably less. A big advantage to size also, and this goes back also to the scale that I mentioned just a moment ago, is that the company is actually able to replicate that growth of the company from location to location. Most QSRs, which is quick serve restaurants, it takes them 3 to 6 years to be operating in the black. Starbucks, they're able to operate in the black within about a year and a half. So that's a big advantage to the company going forward. So we understand now the company's really got some stability to it, and that moat has helped the company going forward. Let's look at the earnings for just a moment. Their fiscal year, it kind of makes fiscal mean FISCAL rather than physical with a P. Fiscal is the part of the calendar year when they start accounting for their operations. And a lot of companies start the beginning of their fiscal year when they start their sales cycle, when they're at the peak of their sales cycle. And I really think that that's why Starbucks starts its sales cycle in October, because what happens in October in the United States? In 15,000 stores, they're selling pumpkin lattes like crazy. And then they go into December where they're selling Christmas drinks and different items. So they start their fiscal year in October. The numbers that I'm going to be showing you were from the end of September. Year over year earnings, when we look at the company in itself, total revenues were at about $8.05 billion for the entire 2022 quarter, the first quarter of 2022. That would be the October to December months in itself, that quarter. When you compare it to the previous year of 2021, it was down to 7.99%. So even though the value of this company is down, the stock value is down about 10% for the year, they have increased revenue. Their revenue, when you look at the numbers in itself, in 2021, the first quarter of 2021, it was off 4.91%. We were really at the height of the pandemic there. But in the past year, it's come back significantly. The first quarter of 2022 is at 19.3%. So that's a big increase. Their operating income has also increased significantly too. Their earnings per share has actually gone down just a little bit. What the estimates were when they did their reporting at the end of the quarter, it was estimated at 80 cents per share, but it actually came out at 72%. Now, I'm going to make this just a little bit bigger for you, for those of you who are watching, because I want you to look at how the earnings has changed over the years. And I'm looking at a graph that's showing the earnings from October, actually from the first quarter of 2016 until the first quarter of 2022. And it's actually been a pretty steady increase, except for the beginning of the pandemic around 2020. And then as the pandemic has had different variants of the virus, we have seen how that's really affected the company going forward. But I have to emphasize too, just take a breather here for a second, that all the information that I'm showing you, whether it's going to be about the competitors for Starbucks or Starbucks, are just the history. And the history of the company is not a guarantee of what the future is going to be. So let's take just a moment too and talk about the guidance, because when the earnings were released in the last quarter, actually at the beginning of February, the earnings projections or the guidance that was given by Starbucks was reduced. And it was reduced just a little bit, not a great deal. I don't think that it had a huge impact in it. When we look at the operating margin, and it says GAAP, and for those of you who don't know, GAAP stands for General Accounting Principles, or Generally Accepted Accounting Principles. From a global standpoint, they're looking at the operating margin staying at around 16.5%, but they're looking for their earnings per share to possibly decline over the next year. And the guidance really said that they're looking for a decrease of about 4 to 6% in earnings. So you have to ask yourself as we go through this, is this the kind of company that I want to invest in? Well, let's talk about it a little bit more. Dividends are one of the best part of this company, and I really love the dividends because dividends really build everything. Okay, the dividends in itself, let's look at their dividends and compare it to McDonald's, because I think that'll give you a little bit of an understanding of the company in itself. Starbucks has a dividend yield right now of about 2.09%. And you might be saying, that's really not that high. But yeah, look, when you're looking for a dividend stock to go into a retirement portfolio, I would recommend that you find a dividend stock that pays dividends that's going to be around 2% of the 10-year treasury yield. So if we've got a treasury yield around 1.9%, I wouldn't go much over 4%, and I wouldn't go actually, down below 1% very much. That's within that range. Starbucks fits right in there at 2.09%. They have a track record over the past 12 years of increasing their dividends, and their growth of the dividends over the past 3 years has been about 39.39%. When I talk to you in just a moment about McDonald's, remember that number, 39.9. Their payout ratio is good too, because this is important. And let me tell you why. The payout ratio is important because if they're paying out all of their profits in dividends, they have nothing to keep over to operate the company. That's one of the things last week when we talked about AT&T. AT&T had a huge payout ratio, where a comfortable payout ratio is what Starbucks is doing right now, which is around 55.21%. So when we compare that to McDonald's, McDonald's is right about the same yield. They have a 2.16 yield. Of course, their track record is a lot longer. They have a 46-year track record. So McDonald's is a good company to look at too, but we'll talk about that on another day. Their 3-year dividend growth, however, even though they've increased it every year for the past 46 years, is less than Starbucks. Remember, a moment ago, we said that Starbucks was 39.39%, where the dividend growth for McDonald's is at 25.30%. And their payout ratio is around the same. It's around 54.98 compared to the 55 that we had for Starbucks. So competitive wise, even though the value of Starbucks is lower, get my numbers up here, even though that the number is lower than McDonald's, the idea is that there's room to grow. I don't think there's as much room to grow with McDonald's as there is with Starbucks. Okay, this is a point that I want to bring back up to you. I mentioned to you in the very beginning because we're talking about stocks and when to buy them. But remember, as you buy the stock, you have to monitor it if you want to make sure that it's going to play an active part in your portfolio. You have to know when to be able to sell that stock. So if you want to use the information that I've given you today and you want to be able to understand when to sell a stock, go over and get the information that I have available to you in the free lesson at whentoselladividendstock.com. I think that you'll be well rewarded with that information. Okay. Now we've talked to stability. We've talked about the earnings. Let's talk more about competitiveness. We talked just a little bit about how it's gone competitively over the past couple of moments, but let's look a little bit more. I showed you this graph in the very beginning, so I'm just going to kind of briefly go through it again. This is the past year with Starbucks compared to McDonald's, Yum Products, which is KFC, Pizza Hut, Taco Bell, compared to Restaurant Brands International, which is Burger King and Popeyes and Tim Horton. And the past year has been kind of disappointing for Starbucks, but we're looking to see how it's going to go forward. So let's draw the time machine back just a little bit further and look at what's happened over the past 3 years. Past 3 years has been better. When we look at restaurant brands, they're actually less. If you're looking at the screen, Restaurant Brands International is the one that is in gold. I've got it in green like Yum Products, but the line is gold. So we're looking at Yum Products, which is going to be the line in green. McDonald's is in red and Starbucks is in blue. So we can see that it's actually done better over the 3-year time period. In the 3-year time period, Starbucks is up 79.29% compared to McDonald's, which is up 125.47 compared to Yum Products at 93.74 and Restaurant Brands International at 23.62. So 3 years gives us a little bit more viewpoint to look at, but in the perspective that this company is down, Starbucks that is down about 10% over the past year, you have to come back to ask that question of yourself: are we at the half glass empty when it's full, or when it's at the bottom? So is the glass half empty or is it half full? If I can get that out. Okay. You hear the bull in the background, so you know that it's time to talk about the bulls and the bears. This is the part of the program where we talk about what analysts are saying about this company. And Starbucks, there are analysts, there's a lot of analysts that have a very bullish perspective on this company going forward. There's those that have a bearish perspective too. We'll talk about that in a moment. But let's look at some of the characteristics that analysts are saying are bullish about Starbucks. Number one is, I've mentioned it before, their loyalty program, Stars for Everyone, has been driving customers from all different demographics, not just those that are in the higher income, but those who are in the lower income or middle income too. That's what they're looking to use the Stars for Everyone program for. Another bullish concept or characteristic of the company is that they are growing significantly in China. We talked about that they have 5,500 stores there now compared to the United States at 15,000, but it's growing. And they're going into the middle market more, as we've talked about. Also, in their retail products, they're expanding their retail products quite actively. And an interesting thing about Starbucks is the afternoons, most people drink coffee in the morning, maybe in the evening, but the afternoons, it's a little bit less traffic. So what Starbucks has started to do is they use their cold beverage menu for afternoon traffic, and they've expanded that. So those are 3 of the bullish characteristics that we're seeing right now that analysts are seeing looking at Starbucks. So let's go forward and let's talk a little bit more about the bearish characteristics of Starbucks. These are things that can really affect the company negatively. We'll talk about a couple of these that are not just affecting Starbucks, that are affecting a lot of different companies. The first thing that's hitting Starbucks really as they expand or continue their leases in their middle market areas, they're having to compete quite heavily in the real estate. So real estate's going up in rents, in price, and leases. So that's digging into the profits. And that's something that could hurt Starbucks going forward. The second thing is that consumer packaged goods that are being, they abbreviate that as CPG. This consumer packaged products are those products that people buy from maybe the quick market down on the street, or they buy it from Kroger's, or they buy it from Target, whatever, Walmart. And if they're going back to work, they may be taking those products with them so they won't have to stop at Starbucks and spend the $5 to $10 for the drink that they really love. So the idea is that the consumer packaged goods is a negative characteristic that we have to look out for, because if that product in itself intensifies the use of those products, I can talk, sure I can. If the usage of those products is more prevalent, then what we're going to see is that it's going to dig into the profits for the retail stores at Starbucks. So that's a negative concept. The other thing is that there is intense competition in the ready-to-drink market. That means that when you go into when you go into the quick market, or when you go into Walgreens, or when you go into Kroger's or Target, wherever it is, they've got a lot of competition. You'll see the Starbucks drinks on the shelf, but there's going to be a lot of competition that's in there too. And the same thing happens with their retail coffees. Now, there's other challenges that Starbucks has going forward. Let's touch upon those just a little bit, because you've got to keep those in mind if you think this is going to be a company that's going to last for years and years. I do, but you need to make sure that you're comfortable with that concept too. There's three really major challenges that Starbucks has going into the future. The first one is going to be labor shortages. I think that's something that's hitting everybody. That's not isolated just towards Starbucks. Second is going to be supply chain challenges. Now, even though that Starbucks has an advantage because of the size of the company, that they can go out and they can buy, millions of pounds of coffee and tons of paper at quantity, they still have supply challenges. Inflation, or the cost of those things going up with transportation and the goods themselves, that's hitting the company too. Here's a characteristic that is different at Starbucks than it is at maybe McDonald's. Starbucks is being challenged by labor issues because of unionization. There are a lot of stores in 19 states right now that are pushing for unionization. On one hand, some of the reports are that Starbucks is pushing back. They may be doing that. But on the other hand, Starbucks has also said that they are there to work with their employees, and they're encouraging them to not unionize, because at that point they can't work directly with them. They have to go through the barter system, or the bargaining system, not barter, but the bargaining system with the union in itself. So that may be something that going into the future could really affect the profits of the company. They actually have been very pro-employee, but there's some employees. I don't work for Starbucks, so I don't know. But since there are so many people out there that work for Starbucks that are wanting to unionize, perhaps that there's something there. You have to keep that in mind as we go forward. Okay, so when we look at Starbucks, let's look more at the value now in itself. This is from Morningstar. Morningstar pegs this company really, the close of price on Friday was at $93.73. Starbucks is valued by Morningstar at $106. Now, that's interesting, because what that says is that this company's really trading, according to Morningstar, at about a 13% discount. So what that does is it gives them 4 stars. Now, remember that the star system for stocks is a lot different than it is for mutual funds. The star system for stocks from Morningstar is really based upon the value. If the value is low, you're going to see the stars high. If the value is high, that is actually what it's selling for, you're going to see fewer stars. As compared, if you looked at McDonald's is a 3-star company compared to right now Starbucks, because it is undervalued and they rate it as a 4-star company. Now, let's look a little bit more at what some of the other analysts are saying about Starbucks right now. There are about 27, there's probably more than 27 analysts that are reporting on Starbucks. But when I look at the primary analysts that are reporting on Starbucks, this is what they're saying. They're saying there's 13 analysts right now that are saying that they are putting out a hold on Starbucks. They're not selling, they're not buying more. They're just saying they're holding on to it right now. However, there are 14 analysts that are saying that Starbucks is a buy. Okay, so the overall rating that we're seeing from Starbucks right now is that it is a moderate buy. Now, let's look a little bit more at what some of these analysts are saying as far as a price range goes. There are so many analysts that rate Starbucks that it's difficult to really show you everything. So what I've done is I put it into a graph for you. And rather than go through each company like Deutsche Bank or Jefferies or Goldman Sachs, I put all of those into a graph, and you can see really what the average is going to be. The average stock range right now, a high that these companies, most of these companies are saying, will be for Starbucks is around $123. They're looking for a low range of 114. Every single analyst is saying that Starbucks is a undervalued company. And that's really a significant statement, I think. So hopefully that'll help you understand whether that at $93, that Starbucks is something that you want to add to your portfolio. Remember, you want to continue to look at the stability of the company, the earnings of the company, the competitiveness of the company. And if you do decide to buy into the company, remember that you need to keep track of it and understand when to sell that stock. And you can learn a lot from my short lesson on selling a stock, when the time is to sell a stock, by going to whentoselladividendstock.com. Okay, I hope that this has been really helpful for you today. This has been a fun review for me to do because I like Starbucks. I like the product. I like the stock in itself. But my thoughts are my own. You have to make up your own mind, and you have to make up your decisions on whether this is the kind of company that you want to be able to add into your portfolio. So as we end this today, what I'd like to do is just remind you to read the disclosure that's at the very end. And I want to thank you for listening today. Now, before I go, I do want to look at the comments real quick, because I think that we did have a couple of different comments from people. I asked the question of, what was your first experiences at Starbucks? And I have one response. I have a couple of responses, actually. I have a response from RM, and RM says that, and actually these three are from Houston, my hometown. They're saying that Starbucks, they remember around 1994, there was a store that opened up at FM 1960 and Champions Forest Drive. In Texas, we call roads FM for farm to market. So yeah, we live in the country here. And RM says, the Houston Chronicle says the first Starbucks was in Highland Village location, then the Galleria, then Westheimer and Fountain View, and then the fourth location opened in February of 1995. He goes on to say that he remembers going to Starbucks on Champions Forest Drive in 1994. And then we have another one. This is SD, and he says, I'm not 100% sure, but I think my first was in the tunnels near One Shell in Houston. And then the third response from SG says, the first one was Highland Village location in Houston, Texas. I have vague memories of the TCBY location there. Well, thank you guys for sharing that information. If you're listening today and you like the information that you hear, make sure that if you're listening on YouTube that you subscribe. Make sure that if you're listening on Facebook that you hit the like and you follow me too, because we're going to be doing a little bit more special things for Facebook as we go along, let's say. All right, so let's end it today. This is Valentine's Day, so go out there and buy some flowers for your special person, and I will talk to you next week. Stay tuned for the disclosure.